With their eyes glued to the screen, investors around the globe are wondering what lies ahead for Tesla. Tesla has overcome the odds in an environment full of obstacles, and its success story never fails to pique people's interest. But what is in store for this electric behemoth? This film takes us on a journey to analyze the nuances of Tesla's profitability while looking into a crystal ball to predict the value of 100 Tesla shares in just 7 years. As we embark on this thrilling adventure, where significant money awaits Tesla investors, fasten your seatbelts. To receive future updates, click the like button and subscribe to Tesla Stock News before we move on. Having stated that, let's begin this video as we begin this new year. We are unquestionably positive on Tesla. Indeed, it was the top choice for most experts, including ourselves. After a very lackluster showing the year before, they anticipated an impressive comeback. To our joy, this optimistic perspective has come to pass. Equity analyst Garrett Nelson has some thoughts. A few weeks back, we changed our recommendation from strong buy to buy, which was a significant change. Concerns over valuation were the main driver of this change, of course, which was greatly impacted by the more than twofold increase in Tesla's stock price this year. Although there is still cause for hope, it is imperative to recognize that the majority of the stock's upward trajectory may have already been realized. This year, the basis of our study and our current price goal is based on an evaluation criteria of 42.5 times our estimated 2025 profits per share, which results in a price target of $310. The uncertain future of Tesla, however, is the real mystery that still fascinates experts and investors. The behemoth of electric vehicles has a complicated web of hurdles ahead of it despite its remarkable track record. Even if these difficulties are real, they don't overwhelm the reality that Tesla is positioned for long-term financial success. Let me now welcome our honored guest, Dan Ives from Wedbush Securities. Dan is a well-known individual whose predictions about the Tesla space have often proved to be accurate. Dan's confidence in Tesla has always been well-founded. We begin our video by delving deeply into Tesla's recent delivery numbers, which have shocked the sector. Despite widespread predictions of a slowdown, Tesla's astute price decisions have strengthened its position in the market and opened the door for rapid expansion, especially in China. Dan presents a clear image of Tesla's dominant position in the electric vehicle (EV) market, implying that rivals are only paying rent while Tesla maintains its dominant position. However, he brings up a valid point. Tesla's yearly production is still at about 1.8 million units, the same as it was at the start of the year, despite the company's remarkable rise in market capitalization and stock price. This raises important questions about whether this rapid rise is really warranted. Dan offers a thought-provoking comparison, comparing Tesla's trajectory to the Amazon Web Services moment, which completely changed the landscape of the industry. He draws attention to key facets of Tesla's growth, like the groundbreaking supercharger network, which has the power to completely alter the terrain. Furthermore, it is thought that Tesla's advancements in artificial intelligence and battery technology will change the game. Dan emphasizes that the market might not be completely aware of how significant Tesla's AI capabilities are just yet, which might be a powerful driver of future development. To sum up, Tesla has become more than just an electric car manufacturer. It has developed into a multifaceted corporation with various sources of income. To arrive at a more precise and thorough value, every aspect of Tesla's business, including its revolutionary supercharger network, strong energy sector, and state-of-the-art AI capabilities, deserves independent assessment. As the story of Tesla develops, wise investors ought to take into account not just the total value of the company, but also the remarkable possibilities that every component holds within the Tesla realm. For those who dare to invest in this forward-thinking business, the trip is far from ended and offers the prospect of incredible prosperity in the future. Speaking of Tesla's trip, let's pause to consider the recent wild ride that investors in the company have gone through. In late 2021, the stock reached an all-time high of more than $407 per share. In sharp contrast, 2022 proved to be Tesla's worst year ever. Tesla's stock fell hard during that turbulent year, losing about 70% of its worth. Shares appeared to be falling almost freely during the unrelenting decline. It's interesting to note that Elon Musk, the CEO of Tesla, acquired Twitter for a record $44 billion at this time, which was one of the only thing that is constant in the world of Tesla is change, and as the narrative progresses, it presents chances as well as difficulties to those who are willing to follow this fascinating trip. Let's now examine in more detail the variables that may affect the price of Tesla's stock in the upcoming years, paying particular attention to the optimistic and negative scenarios and how they might affect investors. Even though the economy is still in flux, 2023 has brought about a phase of recuperation for Tesla. Tesla's stock price has risen dramatically, increasing by around 150% from the year's beginning and now trading at about $280 per share. Many investors are wondering if this rising trend will continue and what the future holds for Tesla and its stockholders. Tesla's recent success can be attributed, in part, to its calculated price reductions across its whole lineup of electric car models. Due to the consumer's ability to take advantage of U.S. government tax incentives brought about by these price reductions, Tesla's vehicle deliveries have significantly increased. Tesla has achieved record-breaking levels of manufacturing and sales because to this rise in deliveries. Apart from implementing pricing modifications, Tesla has profited from an optimistic shift in market attitude that started in early May. This change began when Elon Musk, the CEO of Tesla, announced the appointment of a new CEO for Twitter, drawing attention back to Tesla's primary goal of producing electric vehicles and away from Twitter-related issues. Tesla's stock experienced a surge in optimism following this statement, which also increased investor confidence. Announcements from conventional automakers like Ford and General Motors provided another lift to Tesla's shares. These manufacturers stated that they will permit owners of their electric cars to connect to Tesla's vast network of charging stations. This implies that owners of electric cars from Ford and General Motors will soon be able to conveniently charge their EVs at a number of Tesla charging stations. This action creates additional revenue streams for Tesla and highlights the company's expertise in the infrastructure for charging. Renowned Wall Street analyst Dan Ives has commented on Tesla's recent performance and valuation, stating that he thinks the company should be valued using a sum of the components method. Analysts prefer this method of valuation, which consists of valuing a company's subsidiaries or divisions independently and then adding them together to get the target price and overall valuation for the shares. Given its varied revenue sources and active business areas, this shift in valuation viewpoint may lead to more positive consensus expectations for Tesla. Let's now explore this fascinating query. What could the price of Tesla's shares be in 2030? In order to respond, we shall examine two possibilities. Okay, let's carry on from where we ended up. In the worst-case scenario, a share of Tesla stock could hit $2,500. In this case, a number of variables are involved. Tesla must first and foremost negotiate the complicated regulatory environment that surrounds autonomous driving. Gaining broad acceptance and negotiating the nuances of safety requirements and laws in many locations are formidable obstacles. Furthermore, possible hiccups in the world supply chain can have a negative impact on Tesla's delivery and production timetables. For Tesla to operate, a steady supply of essential parts and materials must be guaranteed. Another problem is the competitive environment in the electric vehicle (EV) sector. While new players are entering the game, established automakers are devoting significant resources to the development of EVs. Tesla needs to consistently innovate, set itself apart from competitors, and efficiently handle pricing pressures if it wants to stay at the top. Tesla needs to maximize scalability and production capacity in the bear scenario. Simplified production procedures and effective supply chain management are required to meet the company's rising car demand while upholding high standards of quality and customer satisfaction. Let's now focus on the most likely scenario, in which Tesla's stock rises to $8,000 per share. We make estimates about product introductions, autonomous driving, and the growth of Tesla's charging network under this scenario. It is critical to obtain worldwide regulatory clarity and permission for autonomous driving. In order to create safety standards and guidelines, this calls for cooperation between governments and regulatory agencies in addition to technology improvements. A game changer for Tesla might be the much-awaited release of the Cybertruck, a revolutionary electric truck with distinctive features and style. Meeting the strong demand for this cutting-edge car would be a testament to Tesla's manufacturing competence and marketing acumen. In this case, Tesla's supercharger network is set to be quite important. If more automakers decide to use Tesla's infrastructure for charging, it may bring in a significant amount of money. Tesla may be able to strengthen its position in the EV ecosystem with this latest readiness to license its charging technology to rivals. The successful implementation of the Tesla Bot, a multi-purpose 5-foot 8-inch robot with multiple functions, may signify a technological achievement. These robots could become very popular goods and greatly increase Tesla's revenue if they can do dangerous and labor-intensive activities in Tesla factories and other locations. Finally, a few factors need to align in order for the most optimistic scenario, in which Tesla's stock soars to $22,000 per share, to occur. To provide an automated ride-sharing service, Tesla's robotaxi fleet would need to operate at previously unheard-of levels of cost-effectiveness and efficiency. This might completely transform urban transportation and bring in a sizable amount of recurrent income for Tesla. Global licensing of fully autonomous technology is a difficult undertaking. Securing global regulatory approval for FSD necessitates not just superior technical proficiency, but also formidable advocacy and negotiating abilities. If Tesla could pull this off, it would firmly establish its dominance in the field of autonomous driving technology. Another pillar of potential growth in this scenario is Tesla's energy sector. Growing its energy solutions portfolio to include energy storage and solar panels would bring in money and help create a more sustainable future. This diversification may draw in eco-aware investors and strengthen Tesla's reputation. To sum up, these scenarios provide fascinating hints about what can happen to Tesla and its stock price in the future. But it's important to recognize that a wide range of factors, such as investor attitude, geopolitical developments, and economic conditions, affect stock market dynamics. Even though these possibilities are predicated on plausible hypotheses, real results might differ. Tesla's history is a unique tale of invention and disruption, and the company's ability to overcome obstacles, adjust to changing conditions, and hold its position as a leader in the technology and electric vehicle industries will determine how successful it continues to be. It's critical for investors to evaluate their risk tolerance, carry out in-depth research, and base their decisions on their projections for Tesla's future. There you have it, a thorough examination of the various possible directions that Tesla may take and the ramifications for investors. Regardless of whether Tesla's shares hit $2,500, $8,000, or even $22,000, the ride is expected to be thrilling. Investors will be keenly monitoring Tesla's trajectory as it continues to innovate and disrupt sectors, prepared to take advantage of any chances that present themselves.